presentation. I just want to make sure it's recording, which I see it is, so thank you for that, Philippe. Well, thank you everyone for taking some time to join us to learn about Stone Ridge, our most recent acquisition. As you can see, it's a 317 unit in Mobile, Alabama, and we'll be using this time to take you through the property, the market, and what we plan to do with this property. And again, thank you for joining. So let me start off first reading the legal disclaimer. This is not an offering. This is for informational purposes, and all the details will be in the confidential private placement memorandum, which we'll send to you if you decide to move forward with us. So at this point, it's kind of all fun and game and informational. So let's get started. Real quick, just taking you through the agenda of what we'd like to cover today. We'll be going over the executive summary, highlights, the team. I'll be introducing all the folks on the phone right now in a moment. I'll go over some of the successes we've had with some prior acquisitions, talk a little bit about Mobile, the market. We'll then kind of jump into our business plan for Stone Ridge specific. Then we'll hand it over to Philippe and Patrick to talk about the financials. And we'll go over our next steps and round out the call with some questions. So a little bit about the property. So like I had mentioned on the first slide, the property is called Stone Ridge. The official name in the area that it's in is Stone Ridge at Summerview Park. So this is a 317 unit 2008 vintage asset in West Mobile. It's in a very affluent area of the market in the city. It's a very nice area with very solid demographics for this property. A little bit about Alabama. So Mobile is Alabama's only port economy, and I'll be going over in a little bit more detail about the market as a whole and why we're pretty excited about Mobile and Stone Ridge and why we feel that this is a really good property to explore and look at. Like I mentioned, it was built in 2008. It is one of the nicer, if not nicest properties, highly desirable waiting list in the Mobile area. They are building some new properties, but they are not even close to the quality and the aesthetics and the amenities that Stone Ridge has to offer. So at a high level, our business plan is to upgrade the units over a 2-year period, 2.5-year period, with about $4,100. We're looking to achieve about $150 rent bump, which we'll highlight in greater detail in the financials aspect of it. And this will help us kind of increase our NOI and execute on the strategy that we'll share with you momentarily. And the group that's going to help us with this is Multi-South Management Services. And we have David Shores, one of the owners, on the call with us, and he'll be going over momentarily a little bit more about Multi-South and their successes and how they'll help us with that. Next slide. So we've been working on Stone Ridge for a little bit of time. We've gone through a couple of different models and scenarios trying to find out the best overall structure, financing structure to give us the greatest returns for this property. And we've made a presentation on a model that we felt very strongly about, but as we continue to look at other debt offerings, we found a group that is willing to work with us at a greater degree and provide much more favorable financing. So that's what we have today, and really the purpose of this call is to go over the market again, go over the property for those who are learning about this for the first time, but really to highlight and get into a little bit greater detail the financing and the returns. So at a highlight, it's increased to an 18% cash-on-cash return. We're looking at about 2.2x return on your investment over the initial 5-year hold. Like I had mentioned earlier, Stone Ridge is in a great location in Mobile, and I'll go over a little bit why we're so excited about the market as a whole. And, like I had alluded to earlier, the reason for this version 2 is we have fantastic financing. So here's the team. This is Tom Reed, and I'll introduce the rest of the folks. Mark Kenny and Dan Hanford were unable to join tonight due to scheduling conflicts, but we have on the line Philippe Schul again, and Patrick Duffy, is working with Mark and can talk a little bit about Think Multifamily, and then we'll introduce the rest of the team here shortly. So I'll kind of continue with the wand here. A little bit about myself. Originally from Massachusetts, now living in Texas. Kind of started my career in the military and the Army, and then led a pretty interesting path to where I am today. I was a commercial diver for a while, did underwater welding and burning in the Gulf of Mexico, and went back to school, got a degree in economics, and then went into technology sales, and I've been doing that for about the past 20 years. Really got into multifamily investing about end of 2016, 2017, and acquired my first property in Memphis. And that's where Philippe and Patrick and I kind of first met. But enough about me. I will hand it off to Philippe to talk a bit about himself, and then we can go through the rest of the team.
Hi, this is Philippe Sheridan talking. So, I met Tom and Patrick, who is going to talk in a second, and Mark a couple of years ago. We started to make a few deals together. As of today, I've led the acquisition and managing assets for 350 units. That's on 4 properties. Really great success with the team so far. Very happy to work with the other team members. Otherwise, my background is in the air and space industry, and that's where I've been working for 20 years. Maybe I'll say a word about Dan. Obviously, I'll let you read the details, but very, very successful young gentleman. Involved in more than 1,000 units, also in several other business medical clinics. And he has also a podcast, very, very active, very successful, and very glad to have him on board. Now I'll turn it over to Patrick, who can introduce himself and Mark.
Thanks, Philippe. This is Patrick Duffy, and appreciate Tom and Philippe for having me on in Mark's absence. I started syndicating transactions in April of 2017 and started working with Mark shortly thereafter in about June of 2017. And since that time, Mark and I have purchased just over 550 units together, primarily in Memphis, Tennessee, and I'm working with Think Multifamily in a coaching role, working with the students in the organization on their acquisitions in an advisory capacity and some of the strategic initiatives for Think Multifamily. Mark, obviously, as many of you probably know, is the founder of Think Multifamily with Tamil, his wife. And Think Multifamily started in about 2012, 2013, syndicating transactions in Texas. They then moved to Atlanta and are now in Memphis and Huntsville, Alabama. And the Think Multifamily portfolio has reached about 26 properties encompassing just over 3,600 units. And primarily, exclusively rather, syndicates all of their transactions with over 150 investors and seeks to provide two times equity multiple over 5 years for value add and core plus multifamily assets. So that's me and Think Multifamily.
Thank you, Patrick.
You got it.
And here we have our co-sponsors who are helping us in being successful with Stone Ridge. I'll kind of give an overview of a few of the folks who are participating with us. So we have Josh and Emily Hauser, who I believe are on the call. They're also part of Mark's program and are working with us to help us with some of the financing and the cost associated with getting these properties under contract. So a huge thanks to Josh and Emily for helping us as we move Stone Ridge along, and look forward to having them with us on this journey. And Derek as well. We have Derek who is also helping us in the capacity to do an outreach and socialize Stone Ridge and help us with capital to acquire this property. So just want to take a moment to thank Josh, Emily, and Derek. And so I'll jump in a little bit to who's going to be managing the asset for us after acquisition. And we've decided to go with MultiSouth Management Services. They're currently managing quite a large portion of our portfolio. And on the phone with us is David Shores. And thank you, David, for joining. I really appreciate you taking the time to go over a little bit about MultiSouth and your background, and just kind of share your knowledge with us.
Sure. Thanks for the introduction. I'm David Shores. I'm one of the principals at MultiSouth Management Services. With my partner, Keith, we founded MultiSouth in 2001. Previously, we had worked together at a large management company in Memphis, and both of us left for differing reasons, but left about the same time and decided to join up and do this. We have, over the past 17 years, developed new construction properties in Tennessee, or rather Arkansas and Texas. We have bought, renovated, and sold a lot of B and C class real estate, probably 25 communities over the last 17 years, and have become a fee manager again, which is what we were before. We're managing about 8,000 units right now in 5 states. We're excited to be part of this. I've been to Mobile. I grew up in Alabama, grew up in Birmingham, so I'm familiar with the city, and have always been intrigued by property there. And I see this asset and realize that it's probably the best asset in the city, and we're excited to be part of it. We have, the next slide you see, slide 10, has 3 track record properties, 2 of which we're involved in. Tom, do you want me to cover any of this, or do you want to cover this?
Yeah, please, David.
Sure.
What this slide is just to kind of give an overview to the folks of the successes that we've had with a few of our marquee properties. And really what I'd like you to talk about, maybe with the assistance of Patrick, is Country View, our most recent success. Mm-hmm. That's one I'd really like to highlight.
Patrick, you can probably tell this story. I can probably tell it with more excitement about how successful you've been, because you're a humble guy.
Well, no, I think you and Keith are the humble ones. I just kind of watch the success take hold. But so we purchased Country View in December of 2017 for $6.8 million. The seller had originally developed the property, and it was 68% occupied at the time of purchase. And within about 6 months, I think we were close to 95% occupancy. And just the work that MultiSouth had done and their speed of execution on renovations and implementing our business plan really was the primary contributing factor to our success there. And so we've really accelerated our timing on our business plan at Country View, and we had originally planned on refinancing at the end of year 2, and we're now about 30 days from closing on our refinance, just over a year from purchase, and we're going to return 100% of member capital and leave quite a few in the bank for ongoing renovation activity there. It's been a massive success. We just got a valuation of $15 million during our refinance process, and are closing based on that valuation. And so it's been a massive success there, but really I can't speak highly enough about MultiSouth and the systems they have in place for implementing our business plan. And that's why, frankly, we want to work with MultiSouth indefinitely for all the assets that we acquire in the surrounding markets. And I think that that's one of the primary attributes that Tom has spoken to in this transaction, is that you have not only a phenomenal asset and a clear path to execution, but you also have MultiSouth, which is going to be our boots on the ground and helping us implement the business plan. And there's really no other better partner than MultiSouth. So
we've really enjoyed being a part of this. What makes this great for us is when we've got clients that are capable of doing what they say they're going to do and buy the right assets, and then let us implement the plan that we've together agreed on, which is what the Think Multifamily crowd brings to the table for us. In my 35 years of experience in this business, I've worked for a lot of folks that really weren't prepared to be property owners and weren't prepared to do what they needed to do, and these guys are. And that's what's made Country View a success.
Thank you, Patrick. Thank you, David, for that. That was amazing insight. Really appreciate that. And really, we're hoping to really dovetail the success that we've had at Country View, like Patrick had mentioned, throughout all of our assets, but specifically to Stonebridge. It has quite a few similarities between the two assets, and we feel really strongly about the plan with the help of David and the team. So next slide. Okay, Mobile. I'll take this one and talk a little bit about the market as a whole, and just really share with you the excitement that we have for Mobile. Like Patrick had mentioned, and a few of the other folks, we have a lot of strength and success in other markets, and what we found is as we tried to expand to find properties that have good yields for our investors and have the attributes for us to kind of execute our model. We looked at a few markets, and in researching, we found Mobile. And really, just the deeper we dug into it, the more excited we were, at this hidden gem. So just to start off, it's jobs, jobs, jobs. This area is just growing tremendously. In my research, which we can share with you, with all of the reference links and all of the data to back it up, there's about 4,400 jobs coming to this market just in Q4 and Q1 alone, and about $1.1 billion in economic investments. And it's really spread across quite a few industries. It's not really limited to one industry. It's spread across some of the largest economic drivers, across the country, is really shared well within Mobile. To give you a few examples of these industries, Airbus and Bombardier have an order for about 2,600 new aircraft that's going to take them through 2026. Amazon has a large distribution center in Mobile that they're expanding, as well as Walmart. The port of Mobile is undergoing a large growth due to the expansion of the Panama Canal, which will allow them to bring more goods and services up through Mobile into Alabama as a whole, which Alabama as a whole is doing incredibly well with all the manufacturing and jobs that are throughout the state. But specifically to Mobile, another really big win is the shipbuilding in Mobile just won a government contract, multi-billion-dollar government contract to build the next generation of naval warfare fighters. And for any of you Navy folks who are listening to this, I apologize. I'm an Army grunt. I'm not really familiar with the nomenclature of all the Navy vessels, but this one is pretty impressive. So with that, this area is poised for growth. There's a tremendous amount of investment coming into Mobile, and we feel that with the population growth in the market as a whole, it can sustain, not only Stonebridge, but the area as a whole. You can go on to the next one, Philippe. So here's a sub-market, and as you can see from this slide, it shows the property itself, Stonebridge. And when they designed and built this property, they did a great job. They didn't clear cut. They left a lot of the natural surroundings, and it feels like you're driving into a resort when you come into this property. So like we had mentioned earlier, it's highly desirable. It's in a great location. There's a lot of things to do around, and it's just a really, really great market. And David, if you would, it'd be great to kind of hear a little of your color on the submarket, and maybe a little bit about Mobile and things that you've learned over the years.
Sure. It's the third largest city in the state. It's about 600,000 people in the combined statistical area with Daphne and Fairhope, which, you know, it's a sizable market. In this submarket is where all of the new construction properties, new being the last 5 to 10 years, other than some core properties in downtown Mobile, have been built. And we've toured all of those properties, and can tell you that Stone Ridge is by far the nicest of all those properties. The topography, the layout of the site, the quality of the building, the quality of the amenities is better than anything there. This is the desirable submarket for upper income families. This is where people live in Mobile, is in this submarket. There's some older parts of town where there's some wealth, and there's some core parts of the city where there are some apartments, new apartments, and younger folks. But this is where people go when they're ready to have a real house. A real home is to this type of property in this part of the city, and this, as I said, is the best one there. It's convenient to everything. You've got this map up that you saw. It kind of hard to figure out the perspective of it in some ways, but that hospital that you see at number 7 is about a mile north of us. University of South Alabama is about a mile and a half north of that. It's close to food, it's close to shopping, restaurants, other amenities people are looking for in life. I think this is the right place to be in the city.
Thank you, David.
Sure.
So, about the property, like we'd mentioned, it's 317 units. It's 2008 vintage. It's 2 and 3 stories, 1, 2, and 3 bedrooms. They do have some covered parking as well as open air parking as well. There are, like the slide kind of overviews here, top of the market amenities, like David had just mentioned. Really, really desirable amenities above and beyond really what that area has. And just can't say enough good things about this property. Next slide.
We do the video, Tom.
Oh, the video, I forgot. Yeah, you can kind of give a quick video if it shows up well. So with this video, it's really just kind of giving you an overview, eagle-eye view of the property, a flyover. This will be included in the documentation that we'll send out. So you'll be able to click on this link and watch the entire video. But really, it just kind of gives you on-the-ground visuals of what this property is without, having to travel to Mobile. So it's actually playing pretty well. Thank you for reminding me, Philippe. So kind of here's the investment highlights in the business plan. So this is where we're going to give some insight and detail of what we're looking to do to bring Stone Ridge to current day expectations. Like I had mentioned, it's a 2008 vintage property, and it's pretty much dated. A lot of the units are of all original construction and build out, and what we're doing is really kind of bring this up to current day standards, and in doing so we feel very strongly about achieving our strategy. So I'll kind of hand it back over to David, and he can go over a little bit about what we're doing to these units and add some insight into how we're going to get there.
Sure. you see on this slide the interior upgrades that are planned, and you see in this picture some of those upgrades in a few in that picture. The present owner has upgraded a handful of units, maybe 20 or 30, with granite countertops. They've left the black appliances. They put in new light fixtures, new faucets, 2-inch blinds, and they've gotten $100 to $150 rent increases on all of those units. We closer to 150 average on all of them. We have seen this kind of renovation before. We've done this sort of renovation before. There are a couple of things that are valuable in what we're doing here in terms of long-term operating expense, and they also bring great value to the rental stream. Granite countertops last forever. Formica countertops don't. New light fixtures can be more energy efficient, and the residents like that. New faucets, just, they'll look sharp with new countertops in the bathrooms. 2-inch blinds make it look like it was built this year instead of 20 years ago or 15 years ago or 10 or whatever the 1-inch blind or the mini blinds make you think. The vinyl plank flooring, that laminate flooring that we install is impervious to water. We've got some of this stuff that's been in place 10 years, and we've never had to do anything other than mop it when somebody moved out, and so that it really reduces turnover cost, operating cost. And then we'll put in stainless steel appliances. And that package with stainless steel appliances is worth that $150 or more. On the exterior of the property, we're going to do a couple of other things that are going to brighten it up. We're going to change the paint colors. We'll paint the exterior wood or the exterior hardy board and trim. We're going to make some erosion control improvements because there are a few areas that need that. New LED lighting. It's brighter and it lowers operating cost a good bit. And then an asphalt seal coat just to make it pop. We should be through with the renovation of substantially all of the units within 3 years. We would not ask a resident to move typically, but would rather turn that unit and renovate that unit when the resident moves out, present resident moves out, and we have another one going in. And we can have all of the materials on site, everything ready to go for every turnover that we do, and can be able to execute the improvements in the unit in 3 weeks. So that's what we'll be doing. I see these notes down here at the bottom of this slide. The property management that is there is a pretty small operation, and really, I think, not in touch with how this works today. And the property's fairly new, but I think when it was built, it was already destined to be a little tired looking by the colors. And the Formica was outdated when they put it in, that sort of thing. So all these improvements are improvements that the market's looking for. They put us above the quality of any of the competition and make us the most special place to live in Mobile.
Excellent. Thank you, David. And you touched upon one thing that I was going to bring to light and share with the folks. And it's the property management and the strength of David. I know he's a modest guy, but MultiSouth is an incredible organization, and David's an incredible person, and just his knowledge and ability to work with us on this project we're really excited to have it. And to let some of the folks understand how we're going to, another data point for our strategy of our executing our plan is the current property manager is currently being managed by one of the owner's sons and his friend. They've done a very good job with managing the asset, no deferred maintenance. But there are areas where a professional firm like David and MultiSouth can come in and gain efficiencies in management and expenses and all the things involved in running an asset like a professional. So we really are very excited about that. So next slide, please. So investment highlights, and I'll be handing this over to Philippe and Patrick to go through the numbers. So Philippe.
Yeah, thank you, Tom. So we mentioned earlier, 38.8 is the purchase price. Our senior lender. We get we'll get a loan of the amount of $32 million at a rate of 5.75%. The term, it's a shorter term, and we'll go over the full strategy a little bit later on, but it's a 3 years term with 2 extensions. We have also, we're working with an equity partner. We will bring the amount of $5 million at a rate of 12%. You know, we can we model that as a second mortgage on the property. Terms are similar in terms of time frame. The equity raise is of 5.2. Closing cost 1.25. Repairs and reserves that were discussed previously at about 1.9. And we have an acquisition fee of 0.5%. Patrick, you want to add anything?
You know, I think you covered it. The equity partner that Philippe had mentioned is a group that would be in tandem effectively with our first mortgage, and they have a rate attached to their equity amount that would be paid similar to how a second loan would be paid on a property that you would purchase and put a second loan on. So the nice thing about this partner in particular is that there's no participation in the appreciation of the asset, allowing for more of the appreciation of the asset to go to our investors. So we had explored other equity partners that were seeking to take a larger piece of the back end of the transaction, and we ultimately settled and found a much better partner in terms of the equity provision that actually allows for that back end appreciation to be distributed among our investors. So it's a much more favorable return profile.
Thank you. So if we look at the financial projections, you know, obviously we worked very closely with Multisouth. You know, when they're together, they did the inspection for us. You know, we worked on all these numbers, and we defined the plan on how the units would be upgraded, and you know, we spaced that in time. We used basically the natural tenants renewal, which is a turnover rate of 40%, which is a very, very healthy rate. So basically, we'll be able to renovate about 100 units per year, and that will allow us to increase the rents of the 15% that we mentioned over 3 years. We also underwrote this property with an economic vacancy of 9%. Some of you may have noted, you know, we're using here a vacancy projection about 5%. The market is really 2.8, so we were a little bit conservative there. And another conservative point is the rent growth of 2.5% after the renovations, and what was observed in the market was 3.7%. So finally, you know, the expenses with Multisouth, we're going to streamline a little bit the expenses on the property. Nothing major, but you know, we're in line with the Class A. It's a newer property, was well maintained overall, as it showed during the inspection. So the investor returns. So we decided to go ahead with a 8% preferred return. You know, it was something important for us. You know, we wanted to make this deal appealing for the investors, and you know, it's 8% preferred return, then 80% for the investors, 20% for the sponsors. And a preferred return means whatever the property is going to generate, the first 8%, they go to the investors. After we split 80-20, whatever is above. And actually even our asset management fee is going to be taken after the 8%. I touched on that a little bit earlier. We have a relatively short-term financing, which actually gave us a better combined interest rate than what we had modeled previously. We plan to refinance after 2 years. After we've demonstrated that the business plan is working well, it will be easy to bring to the market and find a lender that will lend us the money to, like a agency lender, for instance, and with a good interest rate, and we'll be able to give about 70% of the investors' money back after 2 years. So the end result is 2.2x on equity. So if you go invest with $100,000, we will give you back at the end about 220. And because of this money that we will return to the investors, we have an average cash on cash of 18%. So, year 3, 4, 5, you're going to get very high cash on cash returns. Patrick, you want to add anything?
The only thing that I would add, and just kind of preface it with, it's somewhat standard for a value add deal of this type, and it's something that we experienced on CountryView, but for a different reason, but it's similar circumstances, is that for value add of this type of magnitude and lift, it's expected that cash flow or distributions may not be experienced for the first year, just because there's unit turns and there's expenditures going obviously to increase rents. But as you can see, from year 2 onward, distributions are interrupted. And so that's what we experienced on CountryView. It's similar that we would experience this on Stonebridge or Stone Ridge. And so just wanted to clarify that in case anyone had questions there. It's the nature of a value add deal of this type, but given the type of capital that you'd be getting back following the refinance and then distributions there forward, it's actually a little bit expedited relative to some other value add deals that I've seen where maybe a distribution isn't made for the first 2 years. And so I think that it's very compelling that you're going to be able to return 70% of member capital and then have distributions regularly going forward. So that's my piece.
Thank you, Patrick.
You got it.
So the investment highlights, again, our profile, 5-year hold period, that's our horizon. But again, with a refi in the middle, 8% preferred return. We discussed 80-20 after that. Our investment minimum is going to be of $50,000. And we're going to open the investment to both sophisticated and accredited investors. I know a lot of you will watch that recording later on. And finally, we wanted to make clear to everyone or remind everyone, if you have IRA funds, we'll accept those. Some syndicators don't, but we will. And we have experienced a good experience dealing with those IRA funds. So after the acquisition, what to expect from us? Well, it's monthly reports, basically property and business plan updates and financials. We're working these days actually on our properties to send the December reports, as well as taxes actually. Also, Patrick touched on that, the quarterly distributions, they will start after the renovations are completed. But, they will be on a quarterly basis once we've done a good portion of renovations. And otherwise, or finally, communication, we'll communicate on major events, the good and the bad. And, the sponsors, they will always be available to answer your questions. So finally, the next steps before the questions, we will send you an investment packet that is made of the private placement memorandum. and an investor questionnaire and the operating agreement of the LLC. So the private placement memorandum is to describe the investment, and the investor questionnaire, that's the part you'll have to fill always, as well as the operating agreement, sign a page, and we will receive that. We will review that everything is well filled and accept the investment. And finally, we expect the wire to the bank to occur by or on February 1st. We'll accept the investments on a first come, first served basis. And that will be basically as long as the investment packet is filled and the funds are wired. So we're going to open for a Q&A.
So with the questions, you have the ability to unmute yourself and ask a question, or you can submit a question through the group chat. We'll take a moment for people to think through a question and unmute, and you can ask that and we'll answer that. Or you can send it through the group chat and we'll kind of compile what people are sending our way, and we'll answer with that. And while we wait for that, I just want to take a moment to again thank everyone who was able to join us live, and thank you to everyone who has joined us in watching the recording. We really appreciate your time and learning more, and look forward to taking this journey with you. But really, I'd like to thank Philippe and Patrick and David, as well as our co-sponsors as well, for their contributions to the webinar and helping us work through this, getting this property acquired. So Philippe, do you see any questions that have come in?
Well, we have some questions we had received in the past. We compiled a little list here, so it would be good. We can go over that if during this time people can think about other questions. But we can start with what's the cost of replacement cost in Mobile is about $191,000 per door, and we're buying at $121,000 a door. That's a question we had. Another one is the turnover ratio, and I believe I touched on that. It was so we're doing 40%, or that's what the property is doing. So it's very healthy. There's a waiting list. Typical, it's kind of another syndicator. Neil Bauer mentioned it was like the gold standard. So it's a very strong number. I remember we looked at other properties in Memphis. They were at 50%, and that's where you start questioning a little bit. Tom, you want to touch on the demographics of tenants?
Sure. And again, this is our version 2 of our presentation. And again, the reason for that is we have different finance, so we wanted to share that with you. So we received quite a few questions from the first group during our initial presentation. With one of those questions, the demographics is blue collar, gray collar. There's not only the blue collar workers in the area, but the white collar workers as well, and that really kind of lends itself to the industry and the jobs that are being created in that area. So it's a well diversified area. It's a good group, and we feel really good about. Like Philippe had mentioned, there's a waiting list, and there's a very large desire to moving into Stone Ridge.
So there was the question about sponsors, how much money the sponsors will put in the deal, and our plan is to invest about 10% of the raise, so it's about $500,000. And what's the grant growth in the market? As we it's about 3%. We underwrote at 2.5. Also, how did we underwrite the taxes? And that was a very interesting exercise. We went to many sources, including the tax assessor, which that didn't lead us very far because it was very, a lot of parameters. So finally, we spoke to the professional tax advisor that is working on this property specifically, and that will most likely hire. And he explained to us how it was working and like using comparable properties and so on. But at the end of the day, we decided, he said, well, you can expect an increase on a yearly basis of taxes between 3 and 5%. And so we decided, I think we used like a 4.5, a very conservative number on taxes. And the historical occupancy on the property, it has been in the 90+%, very successful from the get-go. And we had several questions also about, the holding period. So we modeled 5 years, refi about year or two.
Well, Philippe, I think you're having internet connectivity issues.
Yeah, actually, that showed up. Was I breaking off?
You were breaking up. I think the internet gods are saying that I think it's time to wrap up. So with that, you can reach out to myself, Philippe, Mark, Dan, the folks who had driven you to this webinar, and we can answer your questions as well. But with that, hey, we have a question.
I have a question.
Okay.
What is the current status of the investors that you're seeking to attract? What percentage of that funding has already been filled?
I'm not quite sure I understand the question.
So when you looked at the funding for this project, there was a principal lender, there was some preferred lenders at 12%, and then there were investors, which I haven't got the numbers in front of me, but it was somewhere around about $5 million worth of the investment.
Oh yes, I see.
Yeah, this one. Right. So the equity that you're looking to raise, the 5.2 million, which was the minimum investment of 50,000.
Correct.
So what percentage of that 5.2 million have you already raised, given the fact that the cutoff is 1st of February?
So we have a soft commit. We had to go back and redo our private placement memorandum. So that kind of put a pause on the fundraising. But from the folks we've spoken to and the hand raisers and socializing it, we have a soft commit that we have visibility into of just a little over $1 million. We paused that effort as we kind of reevaluated and put together this presentation. So we're now back in the process of full-on fundraising for that 5.2. But with that said, there's a minimum and a maximum. Fully funding is at 5.2. The minimum to close is about 3 million.
Okay, and what is the current situation with the property? Do you have an option to buy it at the moment?
We have it under contract. We have a purchase and sales agreement that has been executed. We're just working through that process to acquire it.
Okay, so your acquisition of the property is that conditional on raising all of the equity, the 3 million that you just mentioned?
In order to close, correct. Yeah. So in order, we have debt lined up and committed, and then our component, which is the minimum of 3 million, the fully funding of 5.2. In order to close, we have to come to closing with the $3 million.
And that is that time frame is to the 1st of February.
Our closing is set for February 8th. We put a date out there so people could drive towards it of the February 1st time frame. But of course, you know, we can accept after. We just like to put a date out there so people kind of have an understanding.
Got it. Okay, thanks.
Sure. No, thank you for the question. Well, any other questions? If folks would like to come off mute, or I think Philippe is monitoring the group chat, so I'm not sure if some folks have sent a question in there.
Nope.
Oh,
no, we can wrap up.
Yeah, we covered quite a few of the questions we received on our first presentation, which I'm sure quite a few folks might have had on this one as well. And thank you for unmuting and asking that question and getting some clarity around our path to close and what's ultimately needed and where we are. But we feel very good about the property and where we are, and you know, really look forward to you guys you know, joining us.
Thank you, everybody. Thank you, everybody.
Well, thank you, everyone.
Thank you, everyone. Thanks for sharing.
Yep, thank you. Have a great night.
Thank you.